Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over basically the consolidation, the sideways action in the charts today. And as you see, lots of these altcoins are still relatively down considering the shocking drops that we've had over the last couple weeks. However, we do see a few just pumping, including Matic and good old lunch there, right? So let's go ahead and look at stocks. Stocks had a green day, okay, guys? So crypto didn't move that much, but stocks did not only plummet previously, when we're talking about the last couple days, but it's also rebounded, significantly. I mean, 3% moves, right? 2% moves, 1% moves. These aren't small numbers for the stock market. And so, as we see this spread across the board, we do see this as kind of a rebound from basically the drop that we had. Don't get too excited yet, okay? We haven't really established a floor yet, but we do see some indication that some of what I was talking about might actually transpire to the upside. So let's take a look at the charts in just a moment. But let's give some credit to the economy, which remains, robust, probably against the wishes of the Federal Reserve. And while the president and the administration, they want a strong economy, the Federal Reserve has just been fighting and resisting that because the Federal Reserve wants to, hammer down inflation. And so Jerome Powell and the guys, the banksters at the Federal Reserve, they want to basically get rid of jobs. They want to kill jobs, right? But what you can see is that the jobs market is ending up being a lot stronger than people thought it would be. And here you see the projection of 245,000 job loss claims, but we only got 230,000, which, hey, I mean, that's basically approximately 15,000 jobs saved, right, compared to expectation. And the important point here is that this is less jobless claims than the previous month of 237,000. So that means the economy remains robust, guys. We're not losing jobs at a rate that really is indicative of a recession. And why this matters so much is because that could give the Federal Reserve fuel to increase interest rates again and take the ban hammer to the market and just whack-a-mole smack the market down once again because they just see everything in the economy being overheated, right? The Federal Reserve wants a recession. The president and the administration want to maintain jobs. There is a difference between the federal government and the Federal Reserve. The Federal Reserve is independent of the government, right? And so right now we're seeing that prediction that I made 6 months ago, which was that by the end of the year we would have a fight between those on the side of killing inflation and those on the side of preventing a deep punishing recession. And so now we're seeing the lines being drawn and we're seeing the data getting skewed all over the place. And I don't have time to go into it in this episode, but you're also seeing certain sectors of the economy just having de-inflation while you're having other sectors of the economy having hyperinflation. And so what we're getting is this mixed bag. We are in stagflation, guys. And so maybe we'll touch upon that in a macro Monday. But until then, just take my word for it. There are basically sectors, there are economies, there are countries, there are political factions, both left and right, and they are overlapping and they are crisscrossing, which are taking hard stances on trying to prevent a deep recession, and others which are trying to prevent hyperinflation, and they are not all on the same side. Even different Federal Reserves are opposing each other. The Treasury and the Federal Reserve are on opposite sides of this. We are seeing Japan and Europe being just crushed. We are seeing US partners around the world being just crushed by the strong dollar, and this tension is building up, and we are reaching an apex. We are going to find out who wins this battle, but it is going to take the winter season. So stick with me, guys. We will have a conclusion. We will see the bottom of this market, but it is a very muddy picture right now. And so if you're feeling that in the charts right now, I can show you the stock market. This is the NAS 100. And of course, if we just zoom in on the daily, then what we can see here is that look at this. Look at this, guys. We are just attempting to basically, take back this momentum zone on the NAS 100. Of course, the NASDAQ 100 is very highly correlated to crypto. It is that tech sector heavy aspect of the NASDAQ, which does, have a lot of correlation with how Bitcoin moves, because Bitcoin trades essentially like a tech meme stock, okay, guys? And it's been underperforming lately, just to give you a heads up. And so what you see here is the NAS just barely tapping into its momentum zones, which it will need to grab a hold of in order for the NAS to continue to pump and maybe make one of these little relief rallies like we've had, after different dumps in the past. You always have these little relief rallies. You can call them mean reversions, but I really consider these big relief rallies to be the mean reversion. This is more just like a pathetic little, just a little relief, right? And so what we can look forward to, however, is this big bounce. And where did that bounce, guys? Yesterday I was a little bit confused whether or not we were going to bounce from my line, from my zone there. And well, look what happened. We actually plummeted all the way to the bottom of that zone, and then we got a nice bounce and we held on top of it. And so it actually did both things. It held that line and it also broke that line. But why is this important in how it broke? Because, guys, if you really zoom in here, look at this. You see this level right here, 12,000, approximately 100. And then you look at this level right here, approximately 12,000. I was hoping to maintain any type of bullish stance that we would bounce above that, preferably at this 12,200 level, which, to my surprise, we actually recaptured today. I thought we had just broken down, and man, I had egg on my face because I thought we were going to bounce at this level. But look, we did end up holding on to it. It's just that this fall was so sharp that it decided to stab all the way down to the bottom of this previous wick over here low. And what we did do is we made a lower low than that low. And usually what this suggests is that it suggests something pretty bearish, okay? You see, we didn't capture the momentum zone that we needed to capture to get the MACD and the Stoke on the daily. And our weekly 9 EMA and weekly 4 EMA, those measures of basically possible bullishness, not even bullishness, but possible bullishness, are way overhead on the weekly. So we are nowhere near a recovery right now. And we really are just on watch for the NASDAQ to try to recover this momentum. But since it did push down down, even though this was just a crazy, blip on the chart of a wick, it did push lower than here, and that could suggest that no matter what type of rally we have, probably we are going to push lower and maybe test out some of these lows on the chart. Now, if this was a sign of strength, and if we do end up just building some strength in this area, then maybe this was just some type of a fake out, and we recapture these levels, and we just break out of this downtrend. Look forward to that if there is bullishness in this market to be had. Bouncing here is not the worst thing to do, and so we are going to pay attention to that. But if you do look at the overall downtrend, we do have our work cut out for us. We definitely have to break above this zone to recapture that bullishness to the upside. And we do have some lower support down here around 11,600. If we do fall, perhaps we could get a little mercy bounce in this area, or maybe we just double bottom and just keep going. Okay, guys, this market is weird. This usually is a pretty straight fall. You can see up, down, right? Like just kind of cutting through this area. So if we did fall all the way to 11,000 again, that wouldn't be surprising. It just seems that the market doesn't have it in it to do it today. Maybe next week, there will be a holiday next week, and so maybe the stock market will want to push down, and then that could pull potentially Bitcoin down with it. Sometimes Bitcoin likes to drop on holidays when there's low volume, and so maybe that's what those sneaky market makers might be up to, guys. So just pay attention. If we look at the NASDAQ just briefly, since we already looked at the NAS 100, what I can show you is that part of this bounce. So let's go to the 1 hour just to get a good view. I'm trying to create a little bit more organization in how I look at these stock charts. You can see that the QQQ does have all of these gaps on its chart, and so part of the pump today was really just to fill this gap. And I don't know if you can see this quite clearly on your screen, but we did have this trend, right? You do see this trend here. And, basically we've been bouncing on this trend. And what happened is, we broke down. And not only that, we gapped, right? We created a gap while we broke down because we broke down so hard. And from where we bounced, we ended up retouching the trend line. And now people may feel like this is a very bullish day, but what they may find out is that we have just broken down bearishly and are retesting the breakdown bearishly. And so if we can't reclaim that line, well, guys, there's only one way to go, which is going to be down, and then we have another gap to fill down here, so that could potentially be our next stop, approximately 288, 287. You see this little tiny gap right here, but that would be, consistent with market behavior to fill that gap, just like we had a gap over here, and these wicks down here filled it. That did define our path, in fact, in creating this green line, partially because we were filling in these gaps. And so if we do have a downtrend, maybe this purple box that I have down here is, that gap from back here. Maybe that's going to be part of this downtrend, and we're just doing a bearish retest. Even if things are pumping, that might just be a bearish retest, front running the breakdown, right, to perhaps retesting the lows of this market, or at least this gap. Let's go ahead and move over to the S&P 500. We can see, of course, that basically the same things are happening over here. Let's go to the one-day chart for this one. And you can see we basically tapped my kind of bounce box, right? My buy box down here. And while I wasn't expecting necessarily to break through this green line, it should have been expected that it's possible. And again, this is lower than this one. It does suggest perhaps later we'll come down and at least test the bottom of that little range, if not breaking down to our June lows. Okay, so sorry to burst the bubble if anyone is feeling bullish today, but you can see even the same thing over here on the S&P, just on the S&P 500 SPY, right, where we can get these gaps. You do see an interesting gap all the way up here, suggesting we could potentially have a run up to that area to fill this purple box, but maybe we just were so bearish that we weren't able to fill it, and maybe the market is just going to leave it behind. There is much easier fruit to be picked down here. You can see this gap down here if we do end up breaking down. And again, just like the NASDAQ, we do have these trends which tend to get sharper. They don't tend to stay this broad. They tend to get sharper. You can see that this line right here is actually a very broad line, but then if you actually look at how it breaks down, it sharpens. So I would actually expect us to break down something, more bearish and more painful, something like this. Even if we do end up, retesting some of these higher levels, then we just get rejected and perhaps, test this box again, or that CME gap, which could act as support at least temporarily, or it's kind of on trend with these wicks down here. So who knows? That could be the bottom. We'll find out, right? We'll find out. Going over to the VIX, you can see that it was a good trading day after all. This ended up being a little bit of a bull flag, right? I mean, that's a bull flag. And so could we end up spiking back up? Sure, definitely. This is a very weird thing to chart. We do have a CME gap on the VIX itself, and so this could get filled, but I don't know. But this looks like a bull flag to me. Okay, guys, let's go ahead and just take a peek at some of its indications. It is kind of topping a little bit here, so. Well, as long as we hold above 24, then probably we can continue on our way to the upside. But losing, maybe 23 and a half, probably we're just going to dump down, which would be excellent for trading. You do not want to see the VIX spiking. The DXY continuing to be bullish, just tapping the underside of my parabola over here, which is not an innuendo, but tapping the underside of the parabola is a common occurrence in a market that may want to temporarily turn around. And what you can see is just a little bit of a pullback here. Not sure how long that will last. Ultimately, I do think that we could easily go to 114 on this chart. And if you look at the weekly on the dollar, which again, like the higher the dollar goes, the worse it is for trading. If you do look at this chart, you can see that parabola leads all the way up to this trend line. And so I think maxing out at 114 before we put in any type of serious consolidation. And if you look at the width of this circle that I've drawn here from approximately the area we're in to 114, that's approximately the width of this consolidation area. And so that would be consistent with the pattern of behavior of the US dollar. And so so we could see some type of a pullback, once we really max out, and then perhaps we'll have just a lot of choppy trading, for many months, maybe even for a year, until we get, just one really great pullback, or we get another pump to the upside, which then suppresses markets again, right? So anyway, keep your eye on the dollar. Some of these traders are suggesting, they're mocking people on Twitter or on YouTube. It really annoys me, man, when these like older traders, they're just like set in their ways. Some of these YouTubers with, thousands and thousands and thousands of subscribers, they mock what other people look at. Looking at the DXY is no problem. I mean, I feel like it's a little bit of cognitive dissonance on their part because, maybe they've just gotten into a pattern, or maybe they're just being a little bit lazy with their trading, where, they just do their thing. Well, that doesn't mean you have to knock what other people are doing. If you can start your day by looking at the VIX, the DXY, and USDT dominance, and see if those three things look bullish or if they look bearish, then you can determine what type of trading day you might be having to look forward to, and you have a little extra edge in your system of trading. At least in my system of trading, that's what I do. And what I do like about these experienced traders is that they do appreciate that different people have different systems, but we don't need to be mocking the tips and tricks that other traders have, because looking at these things can give you that little extra edge for the type of trading that I do. And if you're somebody who's been trading for over 10 years and you're just very fixed in your very specific pattern of behavior, then of course you don't want to change that up. You don't want to change what's working for you. But that doesn't mean that there aren't other things that can work, especially for new people who may be getting confused just by looking at, for example, the Bitcoin chart. You know, maybe looking at the VIX and the DXY and the USDT dominance to see if they are bullish, which could indicate a bad trading day, or if the VIX, DXY, and USDT dominance chart are looking bearish, which could be a good trading day. Those things might give them a little bit of an extra edge, and that's what I'm trying to teach. That's part of my system, okay? And so please, those other more experienced traders out there, don't mock these little things that, can help people, or at least can help people understand how all of these markets are integrated. That would just be something that I would appreciate if there was a little bit less knocking the other guy down in this industry. But whenever I turn on these different YouTubers, they always seem like they're in a hyper competition with each other. And it's just so funny because it's like, man, if you're successful, like, why are you worried about that, right? Like, it's always the guys, shilling these ads for everything, though. Those are the guys who do it. Let's see, because I guess they need to have more subscribers to shill more stuff to, right? Let me see here. Let's go ahead and jump over to the Bitcoin chart. And you can see, if you look at the Bitcoin chart, due to the fact that we had a relatively good trading day, even though it started out with that kind of nosedive, or we did have that nosedive on the stock market, it did turn around. It had a really nice bounce, which I just showed you on stocks, even though they haven't been able to secure their momentum. They did have a really nice bounce. And so Bitcoin really hasn't done anything. It's just gone sideways. And looky here, look at this textbook perfect, falling wedge. Once again, guys, I'm bringing you the patterns out here, and I guess you could attempt to make this into a channel. Does it really matter? No, we're just using these things as, cognitive crutches, essentially, in order to, basically plan entries, or basically just analyze the market. You don't have to trade this or that pattern. The price action is what matters most. And what we can see here is that we are getting this just perfect falling wedge, which has now broken. And by the way, guys, I did update the momentum for Bitcoin. This is the 24/7 exchanges, and we're still holding above that momentum line. And also, we are holding above my support area, right? This support zone that I've marked out here, we are just holding it. We've got like a triple bottom there. That's a pretty legitimate local bottom, especially you're above momentum. What we haven't captured, however, is the weekly 4 EMA, and we haven't captured the weekly 9 EMA. And so I'm not macro bullish. If we can capture those things, those are the momentums I want to catch on the macro in order to even be considering anything bullish. But as long as we are basically rejecting from these areas or falling below these areas, I'm not macro bullish, guys. Okay, sorry about that. But we do have our daily momentum, which could challenge these areas. And so could I see a spike up to 20,700, 20,800? Yeah, we could. And then if we get a rejection, that would just be macro bearish. But this formation could still play out a little bit of a pump. And if this chart and stocks were able to just go Super Saiyan bullish, then we could see the measured move all the way up to 23,000, 24,000, and that would potentially recapture the 9 EMA on the weekly, which would then make me start scratching my head and thinking, hey, maybe this bull run really is starting to put into, some type of a bottom formation, some type of accumulation, and I would just have to really consider what's going on. But as long as we're down here, especially under the weekly 4, I'm just, not taking the macro bullish scenario very serious. Let's go ahead and jump over to Bitcoin CME, and here you can see something even more interesting. We are reclaiming, some of those, you know, uh, momentum zones on the daily for the CME, which is the professional exchanges of trading Bitcoin. But and the weeklies are actually a lower hanging fruit here, 22,000. So perhaps our standard should be 22,000 to get a little bit excited on the macro, right? I would just say, yeah, because CME often trades better and more in line with the thinking of professional traders, that 22,000 could be a pretty good standard to hold here. So let's just watch this space. That also would correspond with breaking out of the macro downtrend that Bitcoin has been in. You see this red line. So if we did get above 22,000, that would be quite macro bullish. But the thing that I wanted to warn you about, guys, before we get super bullish or super bearish, whatever, I just want to warn you that after all of these teardrop breakdowns, which I've, carefully taken you through, we do tend to put in a channel or a wedge that brings us to a bit of a diamond formation, right? Here's a kind of a channel and a wedge with a diamond formation. Here's a channel or a wedge with a diamond formation. And what we're getting also is perhaps, this isn't a very pretty one or anything, but we do have this kind of channel with a bit of a diamond formation coming in here. And every single time we've had these downward, kind of falling channels, falling wedges. They've actually broken, well, they may have had a fake out to the upside, but they've actually broken to the downside, okay? And so don't be confused. We might get a hard rejection in this area. And, the top of this momentum zone is actually a very, very good place for us to get rejected from. You can see this dashed line, which has just dashed our hopes every time that Bitcoin gets into this area, or the dashed line, sometimes front running it considerably, we just get smacked down. So any type of a pump on the CME chart to 20,700, if we don't achieve over that 20,700, basically reclaim the weekly 4 EMA on the CME Bitcoin chart, then I would still expect more downward action on the Bitcoin price. Don't get fooled, Alpha Fam. This pattern has been very, very consistent for almost a year now. So buyer beware, okay? When I'm giving you these momentum zones and these levels for potential macro turnarounds, don't ignore them. I'm not trying to confuse you. I'm not trying to give you two scenarios to confuse you. I'm saying either we get this or we potentially have a lot more downside. Okay, jumping over to ETH, you can see that ETH has been relatively strong. The interesting thing about ETH is that its momentum zone, because of how bullish it's been, right? Its momentum zone is considerably lower than where Bitcoin could be, at least for the daily stoke, and that may end up rising. And so let's just look at the MACD for some type of a normal guidance, and you can see that's around 1550 we would have to hold above. And look what ETH is doing. It is starting to capture some of its weekly EMAs, that weekly 4 and that weekly 9, which gives me a little bit of hope for ETH. But getting rejected here would be a confirmation of this head and shoulders formation that could see us coming all the way down to this CME gap, or perhaps even lower, even breaking our diagonal support. And that would be very, very bearish, and it would also violate that daily Stokes. This is the measured move of the head and shoulders. So guys, just be careful. This may look like a bull flag, and it could very well just shoot up and just, it's inside of that bullish zone. If stocks shoot up, maybe Ethereum continues to go as this merge news continues. But guys, just be very careful. It is in a downtrend. It is kind of breaking to the upside, if you can see that. I mean, it is very interesting what's going on here. That's probably why you see Matic shooting up today, because Matic is usually related to Ethereum, and Ethereum has basically broken out of this downtrend, right? So watch this space. I think you can see we're getting a little bit of a red candle right there. So it is struggling to break through this level as I suggested. And what is that level, guys? Wow, lo and behold, it is the neckline of our head and shoulders, which breaking down from would be extremely bearish. But I do have to present to you the other side, because of course, we also have that falling wedge. And just so I'm not biased here, I just want to make sure that you can see, pardon me, trying to turn that stuff off. You can see that that falling wedge has basically had a breakout and a pump up here. So, again, that's related to this trend line that broke. Just want to readjust my falling wedge there to account for those wicks. I was kind of ignoring them in the beginning, but I can see that this pattern has actually respected those wicks, just very nicely, to be honest. And so let's go ahead and get rid of that line, and you can see this textbook falling wedge, which basically is just so perfect and breaking out to the upside. We could have called that. In fact, we did call that as likely. But the question is whether or not it can get above that zone, which is being guarded by this head and shoulders, and which is the kind of final boss on that weekly momentum for some type of bullishness, which could ultimately take us to some pretty high levels. Moving this to the breakout point, it would be to this resistance level for perhaps a double top. And, I mean, we'll find out. We'll find out together. Guys, this market is a wild ride. I can only present to you the facts that I see on the chart. Guys, let's go ahead and move over to Ethereum's, CME chart, and then let's leave it there. This episode has been long enough. You can see that on the CME chart for Ethereum, that we aren't actually over those momentum zones. We are kind of butting our head against it. This isn't a bearish look. This is a breakout on this downtrend, more or less. Uh, uh, I mean, watch this space, okay? Watch this space. Let's just, yeah, I mean, the problem is the CME charts. Sometimes they aren't as clear cut as the 24/7 exchanges, but they do tend to be more accurate. And so I can see a breakout here and then a retest and then another breakout. We have some complex lines on the CME chart. Um, we have lots of curves, we have lots of diagonals, and we just have very complex geometry on Ethereum, but it's very well respected. That's the interesting thing. It's very well respected. And of course, I'm only doing this goofy stuff, which is very accurate and technical. I'm only doing the goofy stuff on the CME chart just to see if I can squeeze out any more data other than what's obvious, which is that we're breaking out from that downtrend. And we've also broken out more or less from this arc. We are kind of just in the wick zone. So if we do get rejected here, again, we haven't captured these momentums that we really need to capture to get ultra bullish, right? That weekly 9, the MACD daily continuation, and the weekly 4 EMA. And so getting rejected in this area could be significant. And then if we lose 1485, it's kind of game over. But that is a daily, so it's just far away right now. So let's just pay attention to these ones. But yeah, if ETH does lose that 1480, that would be quite bearish. And you could see that would actually constitute a break back down into this downtrend. And so, hey, that momentum line is very accurate, guys. Very accurate. This stuff is not made up, okay? Let's see. I think I can delete this line. That's not really significant. Let's probably wrap up there. Maybe I can just very briefly just show that we do also have one of these very awesome, just a perfect falling wedges on ADA, which does give us an indication that there's a possibility that ADA could actually break to the upside. These upper levels, if ETH and Bitcoin do it, ADA is positioned to do it. It's holding on to its support really well at 45 cents here. And so, look, I mean, the measured move is to 55 cents, maybe even 60 cents. Okay, guys? So, hey, I mean, what has it done before? It's basically traveled through this zone. It took the long way on this one, but it basically, here, here, kind of long way here, and then here again. So, if it did burst up to the upside, which rising wedges have a 70% chance to burst up to the upside, then we could expect maybe 55 cents to 60 cents, guys. That's just what the chart is telling me. I can't tell you different than what the chart is telling me. If we look at, Kadena, Kadena is a little bit of a different picture here, but more or less doing the same thing as ADA now. You can see that basically it has this falling channel and it is testing the upper side. It hasn't broken out of that channel yet, so I just can't call it as bullish as some of these other things, but it is on trend with its diagonal, just holding this support line here, and then we can perhaps check out these areas level by level if it does break up, sort of like what we did here, where we took our profit along the way, and that's good money, guys. That's good money. So let's go ahead and take a look at Zilliqa. Zilliqa more or less doing the same thing. Sorry, guys, you can tell which charts I've updated and which charts I haven't. I haven't gotten around to Zilliqa yet, but you can see we more or less are broken well under our diagonal. We are holding on to our horizontal zone. And so we could pop back up here to 40 cents if we do get some bullishness. And you can see that would then have a diagonal resistance above us as well as this kind of resistance. So there would be a double resistance there. But for Zilliqa, that would be a nice 10% move. So, assuming that we don't break down, which would probably be a 10 to 15% drop, right? 15% drop, then there is that potential for a 10% move to the upside. So you guys can take a look at these things for yourselves, but I just wanted to try to show a couple coins there. CRV is one that's looking interesting, but we're just in the middle of this kind of range right now. I really wouldn't be able to say whether or not this is a good spot to buy in. But if we do recover this zone, then you can see that pumping up to 250 would be pretty reasonable if we were able to recover this zone. And then, you know, um, I don't know, maybe we can do something with this, but just for CRV, it is just in the middle of this zone. My friend Crypto Retta was showing me this one, and I think it was because its EMAs were pretty good on the daily when we were looking at some coins. But let me just double check here. And yep, yep. So this one is, it's pretty much bullishly postured on its daily EMAs. It doesn't mean necessarily that it's going to be great on the weekly. Yeah, on the weekly, it's getting a rejection at the weekly 9, but it does have the possibility to squeeze up a bit. So we're going to watch CRV. Usually, my friend makes some pretty good calls, and while we don't take every call that he makes, more often than not, we regret not taking them because he is just a great EMA trader. Guys, I'm going to wrap it up there. That's your alpha for the day. Stay safe and happy trading.